Happy Saturday, everybody. I am so excited about this video. There's so much going on here in Nashville. Rents are absolutely imploding. Capitulation is happening in the rental space. I'm going to show you where and why it could continue through 2023. 2023 and 2024 could be even worse than what's happening right now. That's apartments. On the housing side, we are still seeing inventory increases and contracts tanking. So we're going to look at that too. Lots of updates today. I am so excited about today's video. Let's get in to the data. Nashville housing, everybody. Let's take a look. Starting off with the rentals, these three I've been looking at. Harlow, not much change here. 1 month free. But look at this on Fallon. So this is a big deal. Fallon dropped their lowest price to $19.20. That's a $100 drop from 2030. That's about a 5% drop. On top of the first month being free, which is again about an 8% drop. We're looking at a 12 to 15% drop in prices on Fallon, what they were advertising just 90 days ago. 15% drop. That tells me that luxury apartments in downtown Nashville are in trouble. Let's take a look at another one. Connect. Connect still has the same, new lower rates and get 2 months free. But check this out. By the way, the 2 months free is becoming very common. You come down here, there's a huge apartment complex here. Look at this. Receive 2 months free. Notice the $1,600 being their lowest price band, but here we got a winner. Come on over here off of West End on Murphy Road. We have this new, by the way, this is a beautiful building. Like if I had to pick, this is one that I would be super interested in. I love this area. It's my favorite area. It's where my wife and I house hacked in a neighborhood back in here right against Sylvan Park. But look at this. 3 months free. 3 months free. 3 months free. $1,750. I'll tell you, do the math on 3 months. That is a 25% discount to what they were advertising. $1,750. Let's just assume $1,750 is what they're advertising there. Take 25% off, you get $1,300. $1,300 for a studio. We're going back to 2020 prices on studios here. Now, I'll tell you, this is just the beginning of rental capitulation. And why am I saying that? Well, they always say that you start with concessions, right? Concessions, 1 month free. Now we've seen 2 months free. Now we're seeing 3 months free. Now we're seeing lower rent rates. But let me show you this. Okay, so more than 900,000 units are underway nationally, which is a multi-decade high. You can look, going back to 2000, nothing like this. And here is what the craziest part is, guys. Look at Nashville. We have 25,000 units under construction right now in Nashville. 25,000. Here's the craziest part. That's 15% of existing inventory. Look across all of these metros. It is the highest amount of increase of any metro right now being built. But it gets worse. Look at this. Now we're looking at the urban cores. If you look at the urban core, Nashville has 11,000 units under construction, which is a 40% increase from existing inventory. Guys, these downtown apartments, not only are they capitulating on price, it's because there's nobody renting and there's 11,000 units under construction right now that are on their way. This is looking like a disaster for 2023. Now, maybe there's a miracle migration happening here, but unless you get a migration that's as strong as what was happening at the beginning of the pandemic, where that mass move happened, I don't see this slowing down at all. And here's where it gets even worse. When you look at mortgage-backed securities, these are multifamily commercial mortgages. 2023 and 2024, we have maturities jumping 2x. So at the same time, by the way, CDO, just in case you don't know what a CDO is, this is what in The Big Short, this is what they were calling out as the thing that was packaged up and sold as a AAA rated, very safe investment that was a complete disaster. Well, guess what? We have commercial mortgage-backed securities and CDOs again, and they're all maturing in the next 2 years. At the same time, we have so much inventory coming online, and there's just not going to be enough people for it, I don't think. Now, we'll see, but you can see why these apartments are starting to drop their prices. They need to fill up because these are new. All those buildings I showed you, they're all within the last year or two. So they've got to fill up before they get 11,000 more units of competition. It is wild. At the same time, by the way, offices downtown are empty. Now, I know there's a lot of traffic, and there truly is a lot of traffic, but I am telling you, Amazon stopped construction for a reason. Bridgestone is leasing out their building for a reason. Assurant, you saw it in the news, leasing out their office space for a reason. Oracle just laid people off. Nashville people, or people that moved to Nashville to take a job with Oracle, were just laid off. Now, we don't know the extent of that, and I don't think that this means that Oracle is questioning their commitment to Nashville. But what I'll tell you is that there is a lot of market dynamics that are big question marks right now. And we have so much construction here that it just leads me to believe that there could be a collapse in real estate. But we're already seeing it. I mean, we're already seeing 10, 20% declines from peak rates just 90 days ago, based on incentives and based on rent reductions. So let's keep going. Okay, so Diana Olick, here's what she said. I was talking with a home builder in Denver yesterday who said he feels like he's on the edge of a cliff. Things are going to get super bad going forward. I will tell you, I agree with him. I think he is on the edge of a cliff, and I think that things could start falling off that cliff. I think we could have a huge price collapse. Of course, that's what the chief economist at KPMG suggested. We've got a lot of smart, educated, well-informed people that are now ringing the alarm bells saying, hey guys, this could get bad, very quickly. Okay, it's also a very uncertain time. But it's not like this. I mean, this is getting wild. Now, this is the Case-Shiller index here. Here's what they said about the price drop. And it's not just the price drops. It's the methodology. Okay, when there are no sales happening, your median sales price doesn't change much, right? When your volume just starts tanking, it's very hard to use median sales price to really tell you the true picture of home value, because you have buyers at a standoff and you have sellers at a standoff. There's no real price discovery there. Okay, but here's what the Case-Shiller does. It indexes the same house and puts them together to create a compilation to show you how true prices are changing. So it tries to normalize for that. It's an extremely valuable index. But check out what they said here. The National Composite Index rose by 13% over the 12 months ended in August. Part of the reason that it's such a dated report is because of the rigorous amount of time it takes to go back and look at individual transactions. Okay, so this is down from 15.6% year over year. The minus 2.6% difference between those two monthly rates of change is the largest deceleration in the history of the index. It's the largest deceleration, with July's deceleration now ranking as the second largest. So for 2 months in a row, prices have dropped month over month faster than any time in the history of the index. Guys, anybody that's telling you that prices will continue to go up doesn't know. And that is not what's being suggested in the data. I'm telling you, these are the fastest drops, month over month drops that they've ever recorded. Sounds like a bubble to me. Okay, so let's look at inventory and contracts. So active listings up 9. We're at 3582. Not much of a story there if you want to see a different view of it. 3582, okay? Last week, we were at 3573. That's a 9 listing increase. But here's the point I want to make. Active listings are still going up. We are at the end of October. We are headed into a month of November, which is going to have the lowest closed volume possibly on record, at least in the history of all Novembers in the short-term history. I'll go back and look and see, like, what do we go, like the 60s or something? I don't know. But it's going to be, November closings are going to be crazy low. And at the same time, we have inventory continuing to go up. This is very different. If we look, let's go back and look at January. January, there were 2,000 closings. We're probably going to have 1,800. My guess is November will be 1,800 closings for November. We'll see where I come in, but I'm guessing 1,800. We had 2,000 closings. This is normally the lowest amount of closings you have. January, we only had 2,000 inventory. So think about this. We're going to have 3 to 4 times the inventory in November that we had in January, and we're going to have 10% less closings. So you can see we're headed into just a really big standoff between buyers and sellers. And this is why I think sellers are going to capitulate. We'll see, but I think they're going to capitulate. By the way, guys, I want you to know, if you do enjoy these charts, if you like them, things are changing so rapidly daily that I'm starting a newsletter. I just put it on Substack here. I'm going to put the link. If you want to see charts and graphs and some of these things as I discover them, then click on the link, sign up for my newsletter. I would love it. I would appreciate it. It would give me an opportunity to connect with you, learn more about you, and also publish things that I see that I just don't have time to publish on my YouTube channel. I'll be able to write, because I do this stuff at 4 o'clock in the morning. I get unique views at 4:00 in the morning while you guys are asleep. I'm taking screenshots of what's happening in the rental space. I'm pulling data from RealTracs. I'm creating unique views that not even RealTracs can recreate because I'm taking snapshots of their data and creating daily charts from it. So you are getting views and data that you can't get anywhere else. And if you want to see more of those, sign up for my newsletter. You'll be able to see it. RealTracs data back to active. Now, we talked about this last week as being, a listing goes under contract and then it goes back to active. We are seeing an enormous amount. The last 7 days, we've seen 87 under contracts go back to active. The reason this is important, of the ones going back to active, we're seeing almost half, not quite half, like 45%, but almost half of the listings going back to active are dropping their price. So we're talking about a huge amount going back to active and a huge amount of those dropping their price when they go back to active. These are listings that were at a list price, went under contract, it fell through, and they're relisting at a lower price. That is a very, very strong move towards a buyer's market. Okay, and then in September, 2,900 closings in September with a median sales price of $475, $235 price per square foot. Where are we trending for October? October, we're looking at $478. So you can see the median sales price is ticking up. What is that, about 0.5%? Still the same price per square foot. So what we're seeing is maybe just a little bit larger house being purchased at the same price per square foot. But in the end, here's the takeaway for this. When there's such less volume, it's really hard to use median sales price as a compass for what's truly happening as the home values. There is a standoff between buyers and sellers, and until one side capitulates, we really don't know the true value in it. You can see it. It's kind of flat here. It's flat. There's a standoff. Look at the closed volume. 2,000 right now. Now, if I had to predict today, I'm going to tell you it's going to be 2,200 for October, 1,800 for November. Those are high-level guesses, but that's the trend I'm seeing is we're 10 to 20% lower every single month. And when you look at the chart, the leading indicators, when you look at the closed volume leading indicators, that's what we're seeing. We're seeing just contracts fall through the floor and closed volume quickly following it. So here we are at 993 contracts. Unbelievable for Davidson Williamson with so much more inventory. We have 993 contracts, and you're going to see closed volume just fall through the floor right along with it. Wow. Wow, guys. Wow. If you enjoyed this, if you found it helpful, please click like, subscribe. Please sign up for my newsletter. I would love to continue this conversation through posting a newsletter to you guys. My name's Ethan Flynn. I'm a CPA. I'm a realtor. My full-time job is in finance. I do this for fun. Good to connect with you all. Have a good weekend.